Hello. Welcome back to Invest with Intention YouTube channel. If you are new here, welcome. I am on a mission to turn 13,000 into 50,000 by investing into ETFs, index funds, and high conviction stocks. I'm excited for this one today. We are comparing JEPQ versus QQQI, two of the best covered call dividend ETFs on the market. The big question is, which one is the better long-term hold, especially in a brokerage account? I will answer that at the end of the video, so make sure you stick around. We will also use Portfolio Lab to compare their year-to-date 1 year and 3 year returns, talk about expense ratios, dividend yields, and how taxes come into play. By the way, I only own JEPQ right now. Before we dive in, do me a huge favor, hit that subscribe button and help this channel grow. It costs you nothing, but it helps me out a lot. And as always, this is not a financial advice. I am just sharing what I am personally doing with my own money. Alright, let's get into it. First, quick definitions. Okay, JEPQ is the JP Morgan Nasdaq Equity Premium Income ETF. It's designed to generate high monthly income by holding large cap Nasdaq stocks and selling covered call options. Okay, and QQQI is the newest Nasdaq 100 high income ETF. It also focuses on income using a covered call strategy tied to the Nasdaq 100, but with a different structure and tax treatment. Both ETFs are built for investors who want cash flow now, not just growth. Okay, so let's talk about JEPQ first, since it is the only one I currently own. Okay, so I started my position earlier this year on March 18, 2025 with just one share. Okay, since then I have dollar cost average into my position, and I've bought at different price levels. When it was $50, when it was at $45, $47, I bought zero point 0.4 shares, right? As you can see, 0.5 shares. I also bought 2 shares here, 1 share here. Okay, that's how I did, and I just dollar cost average into my position, and I now own 14.3 shares at an average cost price of 55.22 cents, Okay, the current share price is $58.18, as you can see here, which means I am up 5.35% year to date. JEPQ makes up about 3.73% of my entire portfolio. I don't own QQQI yet, but I'm seriously considering mixing it with my JEPQ and my SCHD position over here, as you can see. Now let's talk about dividends, because this is where these ETFs really shine. Okay, both JEPQ and QQQI pay monthly dividends, which is great for investors who want consistent income right now. They are able to do this through covered calls. A covered call strategy means the fund owns stocks and then sells call options on those stocks to generate premium income. That premium is what helps fund those high monthly dividends. But the trade-off is limited upside during strong bull markets. Now let's look at the numbers. Okay, we will go over here to stock analysis. Okay, so we can see, so let's go here. We will see that JPQ currently has a 10.32% dividend yield and paid about $6 per share over the last year. Okay, however, JEPQ dividends are non-qualified, meaning they are taxed as ordinary income, often at a higher rate depending on your tax bracket. JEPQ expense ratio is 0.35%, which is the annual fee investors pay for management and operations. Now, For QQQI, let's go over here so you can see. It currently has 13.70% dividend yield and pay about $7.42 per share over the last year. About 60% of QQQI's dividends are qualified, while 40% are non-qualified, meaning only part of the income is taxed at your ordinary income rate. The downside is that QQQ has a much higher expense ratio at 0.65%. Okay, nearly double that of JEPQ. Okay, now let's compare performances using Portfolio Lab. So let's go over here so you can see year to date. We can see that JEPQ has returned 14.18%, QQQI has returned 17.96%. That's a pretty big gap. Okay, 1 year return, we will see that JEPQ has returned 12.17%, QQQI 15.96%, and 3 year return, we will see that JEPQ has returned 22.28% on average, but we do not have a data for QQQI because the fund hasn't been around that long. That's the reason. It's only been around for almost 2 years, while JEPQ has long track record going back to 3 years. Okay, so which one is the better buy? Honestly, let's go back to my portfolio. Um, Honestly, both ETFs are solid for income focused investors. JEPQ has a long track record and a much lower expense ratio. QQQI offers a higher income and better tax efficiency, but with a higher fee and a shorter history. My final answer: own both. You don't have to limit yourself to just one. Used together, these ETFs can be powerful income generators in a diversified portfolio. Okay, if you enjoyed this breakdown, make sure to subscribe, like, and share this video. It really helps the channel grow. And remember, always invest with intention. Thanks for watching, and I'll see you in the next one. Bye bye.